Welcome to this video on privacy policy compliance for digital lending in India. This video covers the essential legal frameworks, applicability, and standards for banks, NBFCs, lending service providers, and digital lending apps. This video is structured into 6 key sections, covering the regulatory landscape, entity applicability, data storage requirements, the principles of free and valid consent, drafting standards, and a final compliance roadmap. The regulatory landscape for digital lending is layered. Lenders must navigate the Information Technology Act, the Digital Personal Data Protection Act, and the RBI's specific digital lending directions simultaneously, each with distinct mandates and oversight bodies. Compliance binds the entire ecosystem. While the regulated entity holds primary liability, every layer, including lending service providers and digital lending apps, must implement compliant RBI and DPDP-aligned data practices. The IT Act and SPDI rules remain a vital backstop until the DPDP Act is fully operational. They govern security practices, breach liability, and the legal validity of electronic records, such as loan agreements and e-signatures. The DPDP Act implementation is phased through May 2027. While foundational governance is already in force, lenders should use the build year of 2026 to ensure their notices, consent flows, and retention policies meet the full standards. Under the DPDP Act, consent is the primary lawful ground for processing. To be valid, it must be freely given, specific, itemized, informed, unconditional, unambiguous, and fully auditable. The RBI Digital Lending Directions emphasize strict data discipline. This includes need-based data collection, explicit audit-trailed consent, board-approved storage policies, and mandatory reporting through the CIM's portal. Regarding data residency, India-only storage is the default for all lending-related data. Additionally, organizations must adhere to strict duties concerning data retention, timely erasure upon purpose fulfillment, and prompt breach notification. This table summarizes how the 3 regimes overlap in practice, comparing requirements for governing documents, consent standards, security duties, breach responses, data location, and regulatory oversight. A compliant privacy policy must be a standalone, itemized document. Key areas to cover include identity, scope, categories of collected data, purpose, legal basis, third-party sharing, retention, rights, safeguards, and protocols. A strong compliance posture requires a linked suite of documents rather than a single page. This bundle should include items like consent forms, retention schedules, and breach response SOPs, all connected to your master privacy policy. An effective consent notice follows a 5-layer structure, starting with a short notice at the point of collection, followed by detailed notices, affirmative capture, a permanent audit trail, and an accessible withdrawal mechanism. Failure to comply carries significant enforcement risks, ranging from substantial financial penalties under the DPDP Act to potential criminal liability and severe regulatory actions, such as CIIS delisting or onboarding restrictions. Finally, follow this phased roadmap. Assess and gap map your current state, build and migrate your documentation and systems throughout 2026, and focus on operationalizing and evidencing your compliance by May 2027. Ultimately, a privacy policy is more than just paperwork. It is a vital product that protects both the borrower and the integrity of your lending license. At Finthrex Advisory, we specialize in helping you navigate RBI and digital lending compliance. Visit us at finthrexadvisory.com to learn more.